All right, everybody, welcome to the weekly forecast for Sunday, January 7th, 2024. Let's go ahead and jump into it looking at the E-mini S&P 500 futures contract. We've got the daily chart to the far right, the weekly in the middle, and the monthly to the far left. We've got the volume profile composite here on the daily. Let's see what we got shaken. We had a big congestion entrance move to the downside last week on big volume. You can see this move up now is being reversed back down. The fact that we slammed straight through that extension and the extension of the extension, I do think we're going to see some follow through here. There's a lot of resistance on the yearly, quarterly charts. Also, the monthly chart is coming out of a resistance level here at 4,800. So I do think we're going to see some follow through this week. Looking at the weekly chart, it's tough to say where the resistance is going to be. Are we going to just pick up the true average and fire lower like this, or are we going to test higher up in here? It's difficult to say, but I would say based on the speed of the move and the volume that we saw last week, I think that rallies are going to be pretty capped. And the reason for that is I think a lot of people are off sides now on that Santa Claus rally here. So this is probably a bit surprising to all those who were super bullish heading into the end of last year, the beginning of this year. And I think, shorter term traders are going to get a little bit nervous after this first, week of the new year with this big drop. So I think people will be eager to bail on their longs on any kind of a bounce. I think that's going to add pressure here as we explore resistance levels like we did here on Friday after non-farm payrolls. So I'm looking for continued weakness here in the S&P 500. You've got a nice pattern here setting up for tonight into tomorrow, January 8th, which is a Monday. It is a pullback pattern. You could see something like this. In fact, I do think we're probably going to see that, but I want to look at the rest of the markets to see what we've got shaken. Right now, bearish. The stock indices, S&P 500 does look bearish. All right, let's go ahead and look at the NASDAQ. Oh boy, NASDAQ is not pretty. Just a massive congestion entrance down move. This is not looking good for the NASDAQ. Also, a little bit of a pullback there after non-farm payroll. So the question really, to me, you never want to use words like guaranteed, but it looks pretty likely that we're going to head lower this coming week. The question is, are we going to bounce before we head lower? And if we do bounce, how high are we going to bounce? Well, let's just take a look at a similar situation back here. You can see this trend run here. It lasted a lot longer. We're heading higher here on the weekly chart. Just, you can see as we got to the middle of the year, end of July, this was last year, the weekly finally entered congestion down here. And then you could see it kind of didn't look back. There was the true average that got tested. You had some follow through. It was really just kind of straight down. So if we go back and look at the daily chart there, heading into the end of July, early August, I think that'll give us a pretty good idea of what to expect right now based on the scenario analysis, because I think we're seeing a similar situation unfold. So in order to look at that, let's go ahead and just bring in a little more data. Got 90 days here now. Why don't we jump this up to 365 days? And we'll go ahead and bring it in here with the Sierra charts data. All right, so we want to go back to the end of July. And this is the March contract. That's why, but that's fine. Doesn't really matter. It's going to be similar. So you can see basically here is when you had that move down, and then every little rally was capped down, capped down. So I think we're going to continue to see a similar situation right now. Currently, if we go and look at the current situation, I think there's going to be a lot of resistance up in here for the NASDAQ, the S&P, and the Dow this week, probably the Russell as well. And this is all because the narrative is shifting with the Fed. They're probably not as likely to start lowering rates just, as soon as everybody kind of thought they would. So I think that the market priced a lot of that in. It's going to have to give a little bit back now. So looking at the NASDAQ, you got the composite here. You see we're also trending down. As we're trending down, the volume is picking up here. And now as we head lower here, you can see the volume was picking up even more here. So we hit a little bit of a low volume area, and we've got a pocket overall. If I show you guys, where we are here, I pointed this out before. So you see, you definitely have a little bit of a pocket here on the composite. We're at 16,465, which if we look at the composite back in here, you see it didn't put in a lot of volume as you were heading higher here. So I think you could rip through this low volume area and just continue to head lower, basically, at least down to 16,000, I would say, is kind of what it's looking like now. So again, the question really is, are we going to bounce as we head down there? We'll see. Anything's possible, because markets can always surprise you. You can just get one of these when you don't expect it on the daily. But I'm just not expecting that right now. I think there's going to be continued resistance on the NASDAQ at the true average there at 16,600. So I'm going to be looking to short this market on Monday when I stream live with you guys on YouTube for the day trading. I'm just also trying to get a sense. I'm going to put on some options plays this week, and I want to see, what market will be the best one to put those options on. That's why I'm looking a little bit more carefully at the actual levels here, what I expect. Generally, I just go into each day with my bias, and then we day trade it based on the hourly chart, right? So if the market decides to rally intraday, that's fine, because I'm just watching the hourly and basing my trades on that. But for the options plays here, I want to see if I can get a pretty good level. The Dow looks stronger than the S&P and the NASDAQ, but still, weak overall. See the Russell, I think the Russell's just getting hammered. I called this toward the end of last year. If you go back and look at one of those forecast videos, you'll see the Russell is just right up here at that extension. I mean, this thing is probably headed back down here now to 1800, I would say. I think the Russell looks the weakest, and the reason for this is that you got the 2,000 smallest publicly traded companies in the US. They're going to be affected by these higher rates and inability to refinance their debt. So if the Fed stays higher for longer, it's going to weigh on the Russell. And I'm liking what I'm seeing here on the Russell for resistance. Got a nice low volume node here up into, basically these last couple of highs. You can see that's why price got rejected there. That low volume node, and probably just going to continue to head lower on the Russell. So we'll be looking to play that for sure this week. Let's go ahead and just quickly look at the 10-year Treasury futures. Yeah, also telling the same story. A really nice congestion entrance move here to the downside. Probably going to pick up that true average and head lower. That weird thing keeps coming back. I don't know what that is. That's fine. You can see here on the volume profile, it's looking for acceptance as we head lower. Kind of grinded through this area now, and now we're just going to probably continue to head lower. So bonds look weak, rates heading higher. It's going to weigh on the stock market. Everything's looking nice. Let's look at the 30-year here, looking very similar. Also probably going to head down. You've got a nice low volume area here into Thursday's close, a little lower, about 122.16 for shorting the bonds. I think the bonds, usually the bonds, when they enter congestion like this, they do tend to just pick up that true average and go. They don't mess around. It's kind of like a locomotive. Once it gets headed in that direction, off we go. We don't really look back that much. So I really like stocks are, the indices are a little bit more difficult in order to if you're looking to get short, but then they can just put you through a painful short squeeze rally. You don't know where that's going to end up, so they're a little harder to pick on the swing trading basis. But in terms of the bonds, I really like what I'm seeing here. I wouldn't be surprised to see us just kind of open here tonight on Sunday and just head down like that right off of the true average here. So I like shorting bonds. I go ahead and look at the ultra bond. Very similar, nice little low volume node there. I go into a lot more detail on how to use the volume profile when you're day trading. That's what I use it for primarily. I do use it for the analysis and longer term trades as well, but it's really fun to watch the volume profile shifting and developing throughout the day with the point of control shifting back and forth. The values areas are shifting. I did some videos on this. I think you'll really enjoy them. Go check them out. They're in a volume profile playlist. I think they're going to get they're going to help a lot of people over the next couple of months really understand how to use that volume profile better on the intraday trading. And I'll add more videos to that later. All right, let's go ahead and quickly look at gold. Gold's hanging up, you know, a little bit better for now, but you look at this monthly, you know, that looks pretty weak. The weekly's holding up a little bit, kind of a tight range here. So I'm going to hang off on gold. You know, the daily is heading down for now. And we'll just have to see. I think the gold is contract is caught between the cross currents of risk off and safe haven, right? So it's dropping with everything else, but it's not dropping as hard yet because you're getting some, you know, some safe haven flows that are pouring into gold, kind of stemming the tide to the downside. But ultimately, I think we are heading for some sort of a liquidity event, and gold is probably going to suffer as a result, along with everything else. And as usual, it doesn't suffer quite as much as everything else. So silver is the one that I like from the short side. I traded it on Friday, made a little bit of money. That was nice. And now you have a nice pullback pattern. The thing is, the weekly here on silver, yeah, it's definitely weak. Are we just going to pick up that true average and head lower? You know, probably if stocks are looking weak, silver is probably going to continue to be weak as well. You did have some acceptance down here. You can see on the composite. It's a relatively accepted price right now for silver at 23.20. But you can see this part of the profile here. There's your acceptance, and so it's kind of, that's your low volume area here. Probably going to cycle back down here, I'm guessing, on silver. It's a nice little pullback pattern. I do like it. You did. I got to get rid of this arc thing. I don't even know what this is. Let's see. I think it's a drawing tool of some kind that just keeps coming in here for some reason. Let's see. Erase drawing. There we go. It just keeps coming in. I don't know. We'll figure it out. Oh, I think it's because there's a hotkey on Sierra chart that's also the same hotkey I use for my drawing tools in Camtasia. That's probably what it is. But you can see here on the daily, trending down nicely, silver, beautiful pullback, extension holding into the low volume area. I think we're probably going to see something like this for tomorrow. So, but again, we'll adapt to this when we actually do our live trading on the live stream, depending on what the overnight action is done heading into the New York Open. When I start at 8 a.m., we'll see what silver's doing. But if these areas here, 2340, 2360 are holding, then I'm going to be looking for some continuation like that. So that'll be a beautiful situation. Let's wrap it up here. Copper, we don't really need to look at right now. Looks very weak, confirming what we're seeing in the stock market. Dr. Copper breaking some nice support here. Probably going to see some continuation like that as the monthly cycles down. Everything's looking weak. Let's look at crude. Crude is the only one that was looking strong last week. And that's because on the monthly chart here to the far left, you can see you got a really nice high connector turning point. And crude's been pretty beaten up here, so I do think the monthly is going to try and go for congestion entrance up. Maybe some escalation in the Middle East. They're closing that strait over there. I think it's the Strait of Hormuz. The Red Sea, people are having to take their shipments around the Cape. So I think that's probably going to give crude a boost, especially if the Houthis take out a ship, which hopefully they don't, but you never know. That could ignite crude pretty seriously. So with the monthly is looking nice for crude. Weekly, you've got a very nice, you're in congestion here, framing the range, but you got a nice high connector. You got a lot of support, continuing into this $72 a barrel level. I would expect, as the daily is rounding the bend higher here, any pullbacks down like this week, to 72 into these pockets should be viewed as an opportunity to get long and push higher. So that's what I'm going to be looking for crude oil. Let's Let's go ahead and just wrap it up here with the dollar and Bitcoin. We don't want to look at all the ags right now. Let's look at the euro. So the euro looks, similar. That non-farm payrolls kind of, it was a messy day, big outside day. Are we going to push higher before going lower? Weekly entered congestion down. Monthly still looks pretty weak. I don't know. It's kind of a little bit more of a difficult read here on the euro. But I would say overall, probably the dollar is going to continue to get strong against the euro right now, especially if we continue to see weakness and everything else. That might be suggesting a liquidity event on the horizon, which means, the dollar might get a little bit of a boost from that. Let's go ahead and finish off with Bitcoin. For the Bitcoin bros, don't want to leave them hanging. Yeah, I haven't downloaded the Bitcoin contract here, so give that a moment to load. Here we go. Bitcoin, the monthly, nice little flash pattern up there. Could be some resistance for sure. Weekly just kind of messing around. I mean, I will say it is consolidating these gains so far, after that big pop. So we'll see. It's not really clear right now in terms of which direction Bitcoin's going to go. So I'm going to leave that alone. But overall, I think we've got some nice plays for the week ahead. I think what we've seen the first week of the year is likely to continue with people being caught off guard. We're going to look to play all these markets in the live stream on YouTube as we trade together. Here's the Russell 2000 just one more time. It's probably going to be, the weakest one that I'm looking for. So I'm going to have to find a good options play. And if I find one I like, maybe I'll share it with you guys. Otherwise, we will just stick to our day trading together in the live stream on YouTube at 8 a.m. Eastern. So I'm looking forward to that. Hope you guys have a really good rest of your Sunday. It's getting late here in Sweden, so I'm going to enjoy the rest of my evening. Take a nice walk, minus 15 degrees outside. Have a good dinner and a cigar, relax, and call it a night. So I wish you all well, and I will see you tomorrow morning. Take care.